Good morning, good afternoon, shareholders of CapitaLand. I'm David Gerald from SIAS, and welcome to this KOPI session. I am indeed pleased to have with me today two distinguished gentlemen from CapitaLand, Mr. Lee Chi-Kun, Group CEO on my left, and Mr. Andrew Lim, Group CFO of CapitaLand Group on my right. Welcome, gentlemen. Thank you very much for coming this afternoon to face the shareholders who may have questions on your annual report. 2020, as we all know, has been a very difficult year where many people would rather see it forgotten. The COVID-19 pandemic wreaked havoc on lives and businesses. However, it brought to mind how fragile the world is and got us to recognize issues that have not been focused. As a result, we see a greater focus on ESG and sustainability across all stakeholders. CapitaLand was also not spared from the effects of the pandemic. We have seen CapitaLand reporting sustaining revaluation losses and impairments, which saw the group reporting a full year loss for the first time ever. I'm sure Chi-Kun and his team have been very busy. However, on 22nd March, CapitaLand announced the restructuring and demerger of the investment management business of CapitaLand to create CapitaLand Investment Management. This will be a new phase for many of you shareholders. I recall the first time I held a town hall with you shareholders, and that was when it was Pidemco Land which helped create CapitaLand today. Due to the COVID-19 pandemic, we are having this dialogue session virtually. I must thank Chi-Kun and his team for accommodating this dialogue before the AGM. A very busy period indeed. With social distancing measures, it is not easy to meet shareholders. However, today's dialogue will help shareholders better understand the current situation and the strategy moving forward. To help you shareholders understand the annual report and track your investments, SIAS has reviewed the CapitaLand annual report and posed questions on the business strategy, financial statement, and corporate governance. You can find these questions published on the SIAS website. We also publish questions on many other companies with their upcoming AGMs. We encourage you shareholders to check out our website page for the full list. Before I hand over to Chi-Kun to give his opening remarks, let us watch this short video on highlights of the CapitaLand annual report.
Hi, afternoon everyone, shareholders. Thank you for taking time out, especially during the precious lunchtime, to spend this 1 hour to have this Q&A session with us. Thank you. It's been some time since we had the chance to meet physically. Must admit that the year 2020, was a extraordinary year. I think for many people, countries, companies, at the individual level, and CapitaLand was not spared. We started the year with a lot of excitement, proposing the merger between CCT and CMT, and then before long, China announced COVID issues. We started to have to close down our malls, our service apartments in China. And not long after, the issues became global. Singapore was affected and became a global issue. Spent the first part of the year when COVID first happened, managing the fallout, making sure that the safety, the well-being of our colleagues, of our guests, of our customers was the top of our priorities. And then after that, we had to make sure that our businesses were resilient, balance sheet was healthy, making sure that we have sufficient cash flow. Then, of course, we were quite thankful. The situation in China came under control. And then Singapore also emerged out from the lockdown. And I would say that we went on the momentum to really accelerate the transformation of the business in the second part of the year. I think like many of the other companies, definitely our financial performance was affected. I think David mentioned that we reported a full year loss, but a lot of it is due to revaluation and impairment. We still generated a healthy cash profit of close to about $1 billion and managed to declare a proposed dividend of about 9 cents to all the shareholders. I would say it's, at least in our point of view, still respectable results. We've done a lot in terms of cash management, in terms of in the initial part, held back in terms of investment activity, cut down on unnecessary CapEx or deferred them, and also went on a pretty aggressive effort to rationalize even our staff costs to make sure that we have a much more nimble organization going forward. And of course, during all this time of managing the fallout, we did not forget about positioning the company for the future, which explained why we managed, to present a proposal to restructure the company just 2-3 weeks ago. The proposal was one that really helped to restructure the company into two very distinct entities. One being one would be known as the CapitaLand Investment Management. The other part of the business will be CapitaLand Development. The idea, is to create a CapitaLand Investment Management that is a lot more asset light, capital efficient, focusing on fee income. And this is the part of the business that's a lot, that's, I would say, better appreciated by the capital markets around the world. And the other side of the business that's going to require a lot more patient capital, requires us to take a long gestation period for many of the projects to reach the fruition, requires a lot of urban planning, development, and a lot more volatile in terms of earnings profile. So that part, we are proposing for the development side of the business to be taken private. And the reason why we are doing this, I mean, if you compare against how CapitaLand has been trading relative to the other players around the world, the other developers, you find that in the last 20 years, whether you use a 1 month VWAP, 1 year VWAP, 3 year VWAP, 5 year VWAP, or 20 year VWAP, CapitaLand has persistently been trading at a discount to the book value. And if you compare against the other developers in the region, whether it's in Hong Kong, to some extent China, and also to Australia, you see that the phenomenon is not different. But you compare the developers against the other investment managers, the top of the class investment managers around the world. These managers trade at a much more significant premium to book. So we think that there's a lot of value, to be unlocked, at least for the shareholder. If we could organize the CLIM, as a separately listed entity where it carries the REITs, our stakes in the private equity funds, the manager of the REITs, the lodging business, which is very capital efficient, and also a pool of assets that are easily recyclable, to make sure that we get a better valuation in terms of the share price. Of course, how the whole performance of CLIM claims business will do depends a lot on the execution, because the first day of the restructuring really involves a reshuffling of assets and capabilities on day one. A lot depends on the hard work, whether we can stay disciplined, make sure we hire the right people, and make sure we stay very focused on the execution of the business. On the other side, that's going to be taken private. Essentially, it comprises residential land bank, not land bank, 3 parcels of land in Singapore, and I would say some development business in China. And more importantly, we have also transferred many of the investment properties that are actually operational, but because they are located in cities that I would say would be more challenging, and there are some projects that involve joint ventures with local governments, it makes it difficult, or at least will take at least 3, 5, or 7 years before any of these investment properties could be recycled. So that's the main reason how we have reorganized the businesses from day one. But even though we are proposing this particular restructuring, we still want to make sure that we preserve the original ecosystem for CapitaLand, where the investment business, the CLIM business, will continue to be able to enjoy projects that are completed from the CapitaLand development business, the CLD side of the business, continue to feed business to CLIM or to the REITs or to the private equity funds. And the other advantage that CLIM will have is that it can also create development funds and selectively participate in development projects, so that CLIM can continue to enjoy development upside and being part of a vehicle that's going to be a lot more capital efficient, and in our view will be better appreciated by the capital market. So that's really the long and short of the transaction. In terms of the consideration, what we have managed to do is to negotiate with the CLA, which is a 100% owned entity of Temasek, to take the development side private at a consideration of 0.95 times of the book value. And in our view, we think that that's a pretty reasonable pricing. Of course, the final advice, I think we have appointed an independent FA that will do the assessment and give their view in terms of, and advise the minority shareholders in terms of the fairness and the merits of the transaction. But in our view, we think that the 0.95 times of NAV is reasonable, because you are essentially taking out development projects and also investment properties. Many of them are pretty heavy, low yielding, and will take many years before they are ready for recycling. So that's the reason why we thought that the 0.95 times book is a reasonable one. And the consideration, I think it's already been explained in the various documents. I mean, we can go through the details during the Q&A if you have more questions around the consideration. So with that, I thought I would leave it to David to facilitate more Q&A, and we can go into more the details with regards to whether it's a performance of CapitaLand in 2020 or with respect to the proposed transaction that we have shared with the public 2 weeks ago. Thanks.
Thank you, Chee Koon. Have you been sleeping well?
Um, it got better. It's been rough, I must say. Last year, managing COVID, dealing with the business, making sure that the colleagues were well, the business was good,
Yes.
and having to deal with this very complex restructuring business.
Business.
Yeah.
Yes. I mean, COVID came suddenly, and it must have upset all your plans,
Yes, of course.
and got you sitting up late hours, and Andrew too, and your team. Luckily I wasn't in that team, but it is mind-boggling how it has upset, the momentum, and it has impacted not only your business, but many businesses. So, but I think shareholders would like to know, what were the main challenges that you and your team face of, immediate need to attend? What lessons can you also share with shareholders that CapitaLand has learned from this experience?
This, just to clarify, this with reference to COVID.
COVID.
I think I must say that no company or no organization can be fully prepared for a pandemic of this nature. The thing that I must say that what we have done is, as a company, we've always been very disciplined, both in good times and in bad times, making sure that our balance sheet is a healthy one. We have never gone on an aggressive leverage. Otherwise, you always have to worry about cash flow issues. So that's an important lesson that I think, that I think would further ingrain that in the minds of all the leaders in the company. The second thing, I think what made us truly different was that we had a team of individuals and leaders that worked well together, that were prepared to put the company's interests ahead of the individual interests. We could see people, putting up their hands to take pay cut, volunteering to go help out either at the property or people who were most affected. So that was quite an encouraging sign to many of us. So my own view is, in fact, I was just sharing with Andrew this morning. I was reading a short video excerpt from a Navy SEAL saying that to deal with uncertain environment, you do need a few key attributes in a team or in a company. First, you need trust. You need resilience. And I think the final thing that you need is a great adaptability, having being able to respond, being able to pivot, and you need to be able to trust, have a very, very strong trust amongst the team members to know that, when you go to the war, people watch out for each other and make sure that we emerge well together as one team.
And you have the confidence of your stakeholders, especially the shareholders. I haven't at SIS received the usual, protest or objections, but they all seem to be following your initiative. But the follow-up question would be, how have these lessons made you more resilient?
I suppose that I use a famous quote that I always use to encourage myself: "What does not kill you will make you stronger."
Okay, fair enough. And I think this is a lesson for all businesses, that these things will happen and you must be prepared to take the turn. The recent announcement, you touched on the restructuring, and which is foremost in the minds of all stakeholders. It is foremost in the minds of all stakeholders would be the restructuring, all right? Maybe you can elaborate on the rationale of this move. How will it benefit, especially the shareholders?
We talk long and hard as a team. I mean, the world has changed in the last 20, 30 years. Development business, I think will still continue to be profitable, but it's a lot tougher. To do development business, you need to be able to land bank, and you need to be able to land bank quite at a cost that is very reasonable. I think first and foremost, we think that there's no way you can land bank in Singapore. Even if you buy any piece of land, especially residential, you do need to sell within 5 years. Otherwise, any developer would have to face the same types of duties that you may have to pay, and that will affect the returns. China, we have been very big in China, and China has been a big part of CapitaLand's business, development especially. But if you look at how the Chinese government, in terms of their thinking about the development side of the business, especially residential, the Chinese government has come up to say that home is for staying, not for speculating. And last year, they have come out with this policy of 3 red lines, making it a lot more difficult for developers to buy land and to gain access to financing. So I think the game in terms of development in Singapore and China has changed. The same level of profitability will not be the same as before. So you do need to go into more complex ways of gaining access to land in China through urban renewal, very complex projects that you may need to invest money quite early so that you can invest in infrastructure. And that requires patient capital where you won't see returns until for many, many years later. So that kind of business will not be so easily appreciated by the capital market. So that's why we are proposing the restructuring, where we take the development side private, allowing all shareholders to be able to unlock value in the short run, but still being able to participate on a listed entity, which is a CapitaLand Investment Management, which is still, just to make sure that we put things in context, is still about 70% of the existing CapitaLand's business. We'll continue to own it, and it will stay listed. And if you run it well, and you compare against all the other established investment managers in the region and around the world, if we run it properly, we believe it can trade much better than what CapitaLand has been trading in the past.
Yes.
But again, just to emphasize, a lot of the success will depend on the management, the focus, and how we execute going forward.
But China has recovered pretty fast.
China business, yes. China is a big economy. I would say different levels of recovery amongst different cities. The coastal cities have recovered a lot better than, I would say, the second and third tier cities. The accommodation, people are traveling. If you are taking flights in China, you will see that it's almost 95% full. Shopping malls are getting a lot more, about 70-80% back in terms of footfall. But spending level is almost back to normal. People are starting to spend again in China.
There's some concern about the timing of this exercise, the restructuring exercise, citing that the worst is over, vaccines are being rolled out globally. Some developers in China and Hong Kong, such as Evergrande, China Resources, have spun off their property management arms. However, their reason for doing so was to raise cash to reduce their debt levels. This is not the situation for CapitaLand. Can you address their concerns?
I think the important thing that the current management team took over end of 2018. I think the 2019 we explained the strategic focus of the company is to be a strong developer in the region, in the 4 core markets, and to be a global asset manager. And you see that a lot of the things that we've been doing in the last 2 to 3 years is really to strengthen our development business in these 4 key markets and to become a strong asset manager. The fundamental structural issue remains that the capital market will not give the same level of valuation for the development side of the business. So in terms of restructuring, is something that we think that there will be no best time to do any restructuring, but it's something that it's in line with our strategic focus. We think that we stay committed to do it. We felt that, I think I've also mentioned before, during last year, that we should never waste a crisis. if the crisis is there, if it's in line with our focus and we have the right conditions, we should go ahead, be bold enough to propose something which we believe, okay, it allows shareholders to unlock value and to be able to enjoy the right, okay, if we are able to structure and grow the CLIMS business properly so that all shareholders will continue to be able to enjoy the value creation subsequently.
Yes. That has been the main thrust of CapitaLand Group for the longest time, value creation. And if I may now make Andrew work a little. Yes. We have had reporting, sustaining revaluation losses and impairments, annual report. Give us an overview of the annual report, financial reporting, and whether why it should not cause so much concern to shareholders.
Thanks, David. Good afternoon, everyone. Great to talk to you all again. I just maybe elaborate a little bit on what Chee Koon was talking about. So if you wind back the clock to our financial year in 2020, the performance on the profit and loss principally was driven by two factors. One was a non-cash impairment to our fair value of our investment properties, as well as some of our investments. That was the principal cause of the overall loss that we had to report. But if you take that out, the underlying ability to generate cash profit remained quite strong, quite robust. We had almost $1 billion, as Chee Koon mentioned, in cash profit. So if I were to leave one thing with our shareholders is that whilst we were facing a very existential and extraordinary challenge alongside all of the other companies out there, due to the resilience, the diversification of the business in various sectors and in various countries, and thankfully, the fact that two of our core markets, our two largest markets, Singapore and China, were able to come out of the crisis relatively quickly and demonstrate that things were starting to get better, enabled us to, again, deliver that very robust, resilient cash profit, which told us that fundamentally the existential risk that we were worried about in the first part of the crisis was actually not there, and that CapitaLand was in good shape. I think the other part that, again, Chee Koon touched on was the balance sheet, and this underlying commitment to a discipline around capital structure, not getting too over-leveraged, I think also played a very critical role in giving our banking partners, our shareholders, stakeholders comfort that despite things being very uncertain, we were in good shape from a financial basis, and at no time did we not have the ability to draw on our lines, to set up new financing, which is actually quite fundamental to ensure that we were able to conduct business as usual. So I think that was very reassuring for us.
You were long-term, loyal, institutional and retail investors as shareholders. They have been with you for the longest time. And a lot of retirees stay with you because you pay good dividends. How does the creation of CapitaLand, CLIM, investment management or CLIM, create long-term value for shareholders? They are looking forward to capital appreciation as well as dividends, right? The question foremost in their mind is CapitaLand going to give us good dividends or not? Okay, so I've been asked to ask this, and you please answer.
I will attempt an answer, David. So it's a fair question, but also I think in order to answer this question fairly, we also have to acknowledge that it's very hard to be both things.
Yes.
And to be both a very high dividend yield stock and a high growth stock.
Correct.
I mean, that would be quite a feat to pull off. Another question that is related is, well, doesn't this also put you in competition with your REITs, if you're a REIT of REITs, so to speak, as some people have believed that CLIM will become? So I think it's quite important to make this clear, that our intention is absolutely not to become a REIT of REITs or to continue to pay a dividend level that is commensurate with the REITs, because CLIM is not designed to be a yield stock. We will generate lots of cash, I believe. We will generate a healthy level of cash, which puts us in position to pay a dividend. But at the same time, if we are to grow CLIM in terms of acquiring new third-party capital products, new funds, potentially new REITs, new platforms to grow the lodging business, which is key for us, that's going to require a lot of capital as well. And that is where the term growth of stock comes in. And so a lot of that capital or cash that we will generate over time, if we do our jobs well, will be channeled into growing the business rather than fundamentally returning that to shareholders. So that is, I think, fundamentally the difference that shareholders in CLIM and shareholders in our REITs will have to sort of come to terms with. And if you prefer something that is, I'm going to pay a rock-solid dividend with very little volatility, then I would say a yield product like any one of our REITs is the way to go. But if you believe that there is a good opportunity to participate in the growth of the fund management business, which, as you saw the slide earlier, history suggests is highly valued by the market, very attractive, and what appeals to us on the CLIM side, then CLIM is the way to invest.
For capital appreciation and for conservative dividend payment.
It's a good way of putting it. Thank you.
So, we've had a good discussion on quite a number of areas. Perhaps we can now open to the shareholders to ask your questions. Do we have the first question, please? I believe we have been receiving some questions. What is this exercise about? How does it work? I mean, Chee Koon has been explaining to you, but you want him to explain again. Is this similar to privatization? How does the outcome affect me as a shareholder?
Andrew, you want to try, since I've already explained?
Okay, let me all try.
Yes.
What is this exercise about? Okay, so really, I go back to what Chee Koon started the presentation on, is an acknowledgement that there are elements of our diversified real estate business that the capital markets do not seem to appreciate and fairly value, in our opinion. Hence, we've decided to take that part of the business, i.e. your residential or long development part of the business, and put that in a private company. In the process, hopefully unlocking value in the short term, because that is capital return to you through the privatization of that element. What we will leave listed is CLIM, which is the fund management and the lodging part of the business we believe to be much more highly appreciated and valued by the capital markets. If this works and it trades well after the exercise, then what we will have done is hopefully unlock value for you, not just in the short term through the privatization, but also in the long term through the subsequent listing of CLIM as a vehicle that engages in aspects of real estate that are more fairly valued by the market, in our opinion. So to answer your last question about how this affects you as a shareholder, what we would hope to accomplish is twofold. Giving you the ability to unlock some value in the short term through the implied consideration of $4.10, which is higher than where CapitaLand was trading before the announcement, about 25 to 30% higher. And also in the long run, by giving you a share in CLIM, should you choose to keep that share, we hope that allows you to participate in the long-term growth of what we believe is a very interesting and attractive real estate business.
Good, thank you. With regard to the strategic restructuring arrangement, consideration to be received by eligible shareholder, among others, is allotment of CICT units. May I know the rationale behind this, please? You want to answer?
Thanks, Chai Hong. This is a good question. The entire exercise, there is a listing of the CLIM shares. There's a take private of the development business. At the same time, okay, we are also reducing in about 6% of the CICT units under the existing CapitaLand's balance sheet, meaning that we will reduce it from about 29 to just below 23% in terms of the holding. The reason why we are doing this, because CLIM, okay, mentioned earlier, is supposed to be asset-light, focusing on the fee income business. By doing this, by reducing the stakes, CLIM will continue to be a strong sponsor of CICT units, but there's no need to hold such a big amount. Okay, by reducing this by 6%, it allows us to deconsolidate the debt of CICT units on CLIM's balance sheet. And at the same time, because CICT also holds on to some units in CLCT, it also allows CLIM to at the same time deconsolidate the stakes in CLCT, meaning that at the end of the whole exercise, CLIM will have a balance sheet, that it's a lot lighter, with a more gearing headroom for us to look at more interesting opportunities. Of course, I think the next question is why CICT units and not, say, for instance, ART units as well. We have done a very detailed study. We look at CICT units. We studied the shareholder base between CICT unit holders and also CL shareholders. There's a lot of overlap. CICT is very liquid. It trades quite well, gives a decent return. That's why we have made the decision that we are proposing to do a capital reduction of the CICT units instead of, say, for instance, the ART units that at this point in time, CLIM will continue to own about 40%. If we were to do a similar exercise for ART, for instance, we'll have to distribute something like 16% at the very least to allow a deconsolidation. This entire sector itself, the lodging sector, is going through, I would say, still in the recovery phase. As the travel sector recovers, things will get better. But given the size of the ART units, the amount of free float available, we thought that it is best to just restrict the capital reduction only to the CICT units. Andrew, you have anything else you want to add? Yeah. So that's the main consideration.
Yes. Thank you. Next question, please. Will CLIM be limited to invest only in assets or development from CLA? Can CLIM look externally? Is there a guideline on what new assets versus projects developed by CLA? Sorry. Will CLIM be limited to invest only in assets or development from CLA? Can CLIM look externally? Is there a guideline on what new assets versus projects developed by CLA?
The current thinking is for CLD, which is a 100% owned entity of CLA, to be the preferred development partner, but it does not restrict CLIM for looking for other development projects with other players as well. So I think CLIM has the flexibility to look for interesting development project, raise a development fund, and work with other players as well. The details in terms of the rights of first refusal and arrangements between CLIM and CLD are being worked out at this point in time and will be included in the circular when we distribute out the circular to all shareholders for approval.
Thank you. Next question, please. Is there any? The new world asset class seems to be in data centers and logistics assets. CapitaLand Group has been heavy in office, retail malls, and hospitalities. Will CLIM be going after these new asset classes?
Short answer is yes. We were able to make a very sizable step change in our exposure to new economy after the combination with Ascendas. I think that allowed, amongst other things, CapitaLand to become much more diversified and balanced. If you remember, our historical exposure to commercial, particularly in retail, was close to 40-45%. We've taken that now down to the low 30s in terms of total assets. So we are well on our way to achieving better balance, and I think that's part of the approach that CLIM will take going forward. This will involve clearly looking at interesting asset classes such as your new economies. So that will be part of the strategy. It also is important while we do this to remember that this is a part of the asset class that is very highly valued at the moment. Lots of investors are looking to increase their exposure to new economy. So while we are doing this, it is important to not overpay. And remember that real estate is a cyclical business. So while we are mindful of longer secular trends it is also a tactical consideration in not overpaying at a point of time where the cycle is at the top. And there are some instances where it might actually be better to look at lesser attractive or more unloved asset classes at this point in time, because you can really pick up some good value. So it is part of what CLIM will be very focused on. Yes, we are very interested in increasing our exposure to asset classes such as DCs and logistics, using vehicles that are appropriate, such as funds and our REITs, in order to invite other like-minded capital holders to come and join us in growing that exposure. But balance and timing is very, very important, key parts of that decision.
What I'm hearing this morning is that CLIM is going to be very exciting. All right, next question, please. Gerard Andre, what should the revenue breakdown for CLIM be? Revenues from asset management, revenues from owned properties, revenues from lodging, dividends from REITs?
Okay, why don't I take this one? The full pro forma will be available with the listing document that we will be sending out to all the shareholders in due course. We anticipate that will be early in the third quarter or mid-third quarter. In the meantime, I think when you look at how we've proposed to split the business or organize CLIM, as you can see from the presentation that was earlier circulated, we expect that the contribution from the investment side of the business, i.e. the assets that we own, the stakes in our REITs and funds, will constitute the majority of revenue as well as profit on day one. The contribution from the fund management side and from the lodging side will constitute the minority, we expect, from day one. But as we've made, wanting to make very clear, CLIM is not the finished product on day one. It is the start of putting a vehicle in place that allows us to take this journey as a dedicated investment manager in an area of real estate that we think is growth oriented, very exciting, and gives us the ability to unlock this value over the long term. So this is the day one construct. I would be very surprised if it remains that construct, in 3 to 4 years' time, once we've been able to execute our plan of growth.
Thank you. Any plan to buy odd lot of 0.155 CICT stock?
I'm assuming this relates to the part of the distribution in specie.
Right. Yes.
Yes, I think we will try to put in place the usual mechanisms for unit holders or shareholders of CL to be able to sell up, up or down and get you to a round lot.
Answer is yes.
Yes.
All right, next question, please. Is there any more? How would CLIM be different in terms of strategies from Maple Tree investment moving forward?
I don't think we're in a position to comment on Maple Tree's investment strategy. I mean, they have their own plans, they have their own strategies. I think that would be explained by their team in their own annual report. So I think we just want to focus on what CLIM would do. It's going to focus essentially on our REITs, our private equity funds, the ability to create new capabilities, new abilities to generate fees for the future relating to exposure to real estate, or real estate is the underlying asset classes that we will be playing in. It could be debt-related instruments. It could be maybe some extension from the real estate, maybe on the digital infrastructure side where we see data centers or some digital towers. So these are things that the CLIM will look into, but largely focusing around data center, around asset management of real estate as the underlying asset classes.
Thank you. Where do you see CapitaLand in 5 years' time?
I suppose this one refers to CLIM. My own view is in the first 3 to 5 years, we should really focus our expertise to really become a strong asset manager in Asia. We have built up very strong boots and experiences in the core markets in Asia. If you look around in Asia, there isn't an asset manager that has the same level of track record the same level of boots on the ground. I think we can do a lot more in China to tap a lot of capital in China and outside China into different asset classes to grow the AUM and the fee business. Focus in Asia in the next 3 to 5 years to become clearly the leading asset manager in Asia, and maybe of some exposure in Europe. So that will be the main thrust of our energy in the next 3 to 5 years. We have very strong contacts in China, whether it's with the local authorities or with the customers. We haven't really gone and built up the leverage on this advantage to build the asset management expertise across the different asset classes in China. Yeah.
In short, it's going to be big and exciting. Isn't buying Ascendas 2 years ago a prelude to the current initiatives?
It's a very astute observation. If you wind back the clock to our announcement January 19, when we announced the Ascendas, the combination or the proposed combination with the Ascendas, if you take that material, you'll see that we organized CapitaLand 3.0 into 3 strategic growth pillars: development business, fund management, and lodging. And lodging and fund management were identified and earmarked as areas that we really wanted to grow strategically. So to answer your question, the combination with Ascendas, which brought us our exposure into new economy, 3 new REITs, and a host of private equity funds, I think was a big catalyst in allowing us to start to seriously consider the next phase of CapitaLand 3.0, which is what we announced 2 weeks ago. So the answer to your question is yes. I think it would have been much more difficult to contemplate what we are doing today if we had not combined with Ascendas. It is consistent with the 3.0 strategy, the way we organized our growth pillars, and enables us to really focus on 2 of those 3 growth pillars, fund management and lodging, in the CLIM platform today.
Thank you. CLIM will be asset heavy on day one. Can you give me an overview of how you intend to grow it faster than CapitaLand? You have given much of it already. All right. So you have said that it's going to be big and exciting, in short. All right. So I think this question has been answered adequately. Can we have the next question? As a developer, what initiatives have you put in place for ESG and yet balancing the business KPIs?
Well, we've launched a 10-year sustainability master plan, 3rd quarter of last year or start of 4th quarter. That master plan remains relevant, and it remains the primary roadmap for us to continue to remain as a responsible steward for ESG, and what I would like to believe is as a leader in our sustainability initiatives. So whether we are private, public, 1 company, 2 companies, my sense of it is that the approach to ESG and sustainability will continue to be holistic and follow the same guidelines. Yes, we will have to make some refinements in how we report on our initiatives, but the underlying philosophy and the underlying commitment to remain a sustainability leader will not change. So the KPIs are set up. We've got very granular initiatives to look at how we invest, how we develop, how we operate each of our assets in order to meet this 10-year footprint and 10-year set of objectives, which is very aspirational, by the way. That should not change. I don't see that changing much going forward. Thanks.
Well, Chee Koon and Andrew, we've received very many interesting questions, diverse questions, and you have answered all of them. I think we will be leaving this discussion feeling quite comfortable in what you're doing, that it's going to be an exciting time for the shareholders. But if you have more questions, you can always send it in to CapitaLand. I'm sure the Investor Relations Department will be more than happy to answer your questions. And this was organized, as we have done in the past 2.5 years to help you make an informed decision, to help you have the answers to your questions. And I must say that this distinguished team from CapitaLand, the CEO and the CFO, have answered your questions adequately and amply. So have a good weekend and keep safe. Thank you.